I play in property, therefore capital gains tax applies to my profit. Guess again. Hi, I'm Jeff Banks from MW Lomax and this is the Banks Report.
The Banks Report, a commentary by noted property and business tax consultant Jeff Banks. Jeff is not your ordinary accountant and speaks in words and terms that you understand.
In my practice, I help people who are working hard and using property and self-employment to help them reach their financial goals. In a traditional sense, I buy an investment and hold it for an extended period, and here we are looking at more than 12 months in a general sense. In some cases, getting a revenue by working the asset, such as rent, and then I sell it, so capital gains tax will apply. CGT is not another tax. It's a piece of legislation within the tax laws that tell us how much of a profit we make on an investment we have to include in our tax return and ultimately pay tax on. In essence, if you have made a profit to which CGT would apply, you get a 50% general exemption and pay tax at your marginal rate on the remaining 50%. CGT, in effect, can be your friend when it comes to longer term transactions. There have been some cases won by the ATO of late which have challenged this view of what is and what isn't a CGT event. Firstly, there was August's case. In essence, the ATO challenged the taxpayer's intentions over the holding of a piece of property. Although the property had been held well in excess of 12 months, one transaction on which the ATO could suggest reflected business intent meant the loss of the 50% CGT general exemption, and as such, there was much more tax to pay. Now, this was not a rent-producing investment, it was a block of land. Secondly, a private ruling was challenged in the courts centred around whether the mixing of intentions by a taxpayer could lead the ATO to a low-hanging fruit approach to taxing transactions, and unfortunately the ATO won. The mixing of intentions around properties held by a taxpayer where revenues from both capital investment and revenue intentions in the same year saw the denial of the 50% CGT general exemption. For many of you, property has become a source of income generation. I would suggest if you are seeking to mix intentions or simply look at dealing in property as an income source, you need to tread carefully when it comes to taxation strategies. Advice is always close by, and a call to your client account manager at MW Lomax or dropping us a line at strategy@mwlomax.com.au will put you in touch with an expert who can guide you through the taxation maze, and you never know, we might just be able to see other ways we can assist you in achieving your goals and protecting you along the way.
The Banks Report is created by Jeff Banks of MW Lomax, a specialist financial services firm offering strategic advice and services you need in property and business, including accounting, taxation, finance, financial planning, risk insurance, superannuation, and business advisory.